We're with Samuel Pelaez, Chief Investment Officer and Portfolio Manager at Galileo Funds, an asset management company based in Toronto. Thank you for being with us, Sam.
Thank you for having me again.
So let's talk about the gold price outlook. You know, it's looking increasingly mixed, especially with geopolitical risks driving the yellow metal in various directions, and the current flat price of it with the Federal Reserve meeting coming up. What's your expert intel on all of this?
I would start with the US dollar. If you look at the chart of the US dollar year to date, you'll notice that it's down about 10%. But more importantly, it's broken below several key support levels. And so it's technically broken, as technical analysts would say. But it's more important that when you revisit history, this has happened about twice over the last 20 years. And in both occasions, what's ensued is essentially a bear market for the US dollar. Mm-hmm. And the flip side of that is when the US dollar weakens, emerging market currencies rally. When these currencies rally, the purchasing power of these nations increase, they're able to afford more imports and they can industrialize. And that generally coincides with a bull market for commodities because they need to import all these raw materials for that industrialization. Mm-hmm. So it leads into this phenomenal global reflationary boom. Mm-hmm. And with the Fed not expected to hike rates any longer this year, this is perhaps a very good point for investors to refocus into commodities and especially into gold.
Right. So now that you've said that it's a good time to get into gold, how are you and your team members at Galileo offering something different from alternatives like the GDXJ, the GDX, and the XGD?
Well, actually, we're currently working on a new product that's going to be launched fairly soon, and I'm really happy to talk to you and to investors about it today. It's an ETF, but it's an ETF unlike the alternatives that are currently in the market. And I say that because we've structured this product to reward good stewards of capital, great stewards of capital. Whereas the existing products, the GDX, the GDXJ, even the XGD here in Canada, right, they tend to reward larger companies with larger market caps. We find that that's not the ideal way to structure the product.
And how did you get to develop this product?
Well, we're partnering in this product with US Global. US Global has a phenomenal track record investing in the gold space, and we've essentially taken all of the knowledge and the know-how, and we sort of, deconstructed it. We've gone back and found all the great investment successes in the gold space, and we sort of, tried to deconstruct them and say, what do all of them have in common? What's the, the underlying thread amongst all of them? And what we realized is we want to have good stewards of capital with phenomenal capital efficiency. And I can get a little bit into more details as to what that means. Good stewards of capital are companies that can reward you, can generate cash flow above and beyond other alternatives in the space. And capital efficiency is more about the cost, the margins, companies that have unique assets, and that's the easiest way to quantify that.
Right, and is that the quantamental model that you're describing? And I know that's a term that you're using.
Yeah, we actually, I can't tell that we coined the term, but we're possibly the largest users of the term. Right. And quantitative analysis has been done over the years on charts and technicals, but not so much on the fundamentals. And we've actually spent about 10,000 hours sort of applying quantitative tools to the fundamentals so that we can translate ideas and intuitive, models that we have in our brains as to how we think in the gold investment world, and sort of translate them into quantitative factors that we can apply to the fundamentals, to the balance sheets, to the income statements, to return on capital, to the margins, to the operating cash flows, et cetera.
Now you're attempting to, select names that will do very well in bullish markets, but also downtrending markets. Everyone wants to achieve this, but how are you going to be achieving it?
Well, before I answer your question, I'd like to say that we've actually found that this is the outcome of the process. We didn't start with the idea of, putting together a product that outperformed both markets. We just wanted to, apply all of our knowledge and our tools to create this product. And after we created it, we ran, multiple iterations of it with Monte Carlo simulations and all these phenomenal quantitative tools. And we figured out that it has the ability to do that.
Right, and it's effective.
It has the ability, the potential to do that. The way it works is, in a way, the old adage of, rising tide lifts all boats. That means all good companies rise with all the levered companies, which is sort of what investors have been talking about for ages. Is you want leverage to the commodity, but generally most stocks have that leverage. But when you have good stewards of capital who deploy cash at the right time, like the royalty companies have had a great track record of it, and you have companies with substantial margins, lower financial leverage, those tend to outperform the downside. So when you're going up, we get the lift, just like everybody else.
Right.
But when the market turns south, you have better balance sheets, better capital allocation, fatter margins, and all that translates into a better structure, a better model, a better product.
Gotcha. But why is it that you're saying that these passive strategies used by competitor ETFs are not good enough? But why is it still a popular mainstream strategy? In your own words, what do you think?
The industry sort of defaulted into them because those were the indices that were available initially. So this began with with basket products, in the late 80s, I believe, and it sort of just evolved in a way. But
we're used to it, I guess.
We didn't have the quantitative tools that we have today. We have phenomenal software today that allows us to do numerous iterations of strategies, different structures, different tiering systems, different rebalancing methods, and we've gone through all of that to create a better product. This is not something, the passive strategies haven't done this, right? So there's an evolution in the ETF world and in the passive investment world, and we're an active part of that. So this product is going to be at the forefront of that.
Before we end, I want to touch upon your past stock picks with us, namely, for example, Novo Resources. How has it performed in the last few months?
Well, you can see my smile. Novo has been a phenomenal win for our funds. We recommended it on this channel about 4 months ago. They had done a placement to advance a project called Beaton's Creek, which is currently advancing, and it's a phenomenal project. But simultaneously, on their other grounds and the partnership grounds that they have with other companies, they made a major discovery that yielded, even visible gold nuggets the size of watermelon seeds. We haven't seen those in the gold investing world for quite a while.
Right.
So, it's got a lot of attention. The seniors are interested. The intermediates are interested. Eric Sprott is a big holder, and Kirkland Lake Gold
you mentioned that last time.
made a major investment into it recently. And we believe there's going to be an exciting story for the years to come because there's so much work ahead of them. They're trying to prove the length and the extent of the resource, which potentially could be many, many kilometers. So there's lots of news releases coming out, so definitely keep your eyes peeled for news releases.
Great. Thank you so much, Sam, for your time.
Thank you.
To learn more from experts like Sam, make sure you follow us on social media for the upcoming videos, and of course, sign up for our free newsletter on SmallCapPower.com.